Let's dive into the world of finance with our next session, Funding for Growth, Unleash the Funding Landscape. This session aims to provide insights into various funding avenues and their implication for business growth. I'm privileged to introduce our distinguished panel of speakers for this session. First, we have Ms. Padmaja Ruparel, the co-founder and president of Indian Angel Network, India's first and world's largest business angel network. Ms. Ruparel's work has been pivotal in fostering early-stage funding for startups, and her insights promise a wealth of knowledge on angel investment. Next, we have Mr. Arjun Vaidya, partner at V3 Ventures and Venture Lead, a successful entrepreneur turned venture capitalist. Mr. Vaidya brings to the table a unique perspective on the venture capital world and how it can fuel the growth of businesses. Our third speaker, Mr. Anil Joshi, is the founder and managing partner of Unicorn India Ventures, a venture capital fund investing in early-stage startups. His deep understanding of the startup funding landscape provides an invaluable resource for all aspiring entrepreneurs. Our final speaker, Mr. Neeraj Tyagi, is the co-founder of We Founder Circle, an early-stage strategic investment platform. His expertise in fostering growth through strategic funding will offer a new angle to our discussion. Guiding this insightful conversation is our esteemed moderator, Mr. Alok Patnia, the managing partner and CEO of Taxmantra Global. With vast experience in financial consulting and taxation, Mr. Patnia's understanding of the financial landscape will significantly enrich this discussion. Together, our panel brings a depth of experience and unique insights into the intricate world of business funding.
Hi, namaste and welcome to all the esteemed panelists and lovely audience of budding entrepreneurs and inspiring leaders. This panel is very interesting, and we are sitting in a time wherein it's a epicenter of transformation. And when we talk about transformation, there is a seismic change in the world order, right? Seismic change in the sense that Indian entrepreneurs are at the world stage and they're going to rule the world. And more so with Indian startups. And they're fueled by a different kind of energy, innovation, vibrancy, ambition. And there are a lot of funding opportunities which we have now, right? And to talk about Indian startup ecosystem, in the last decade, we have emerged as the third largest ecosystem in the world. And the kind of depth, I would say confidence, and the kind of impact Indian entrepreneurs have today is at the peak. And with this, I think I welcome the panelists again. And today we will navigate, explore this very interesting Indian startup landscape. And we will try to bring in meaningful dialogue today. We will dissect a lot of theories, and we'll try to bring in something which will be meaningful for the audience. With this, let me start, and I will start with Padmaja. So, in the last 3 years, if you talk about, if you go back in the month of January, February in 2020, when we were almost at pandemic, and pandemic was already there in US and India, we were thinking, kab lockdown hoga, kab lockdown hoga. From today, when in the last 3 years, a lot has happened, right? Pandemic, systemic failures in US, Fed rates, VC firms raising a lot of money, they don't know where to put money, and then the problems around it. So if you can throw some light inside in terms of what has happened in last 3 years, and what impact it has for the Indian startup ecosystem, right? In terms of positives and challenges, if you can throw some insight on that.
So, thanks Alok. Before I say anything, I do want to take this opportunity to actually congratulate the Kolkata team. I am so pleasantly surprised to see the crowd, the kind of speakers, the kind of content you have. So, take a bow, the organizing committee. Really well done. So Alok, you're right, the last couple of years has been pretty different to what we've seen over the last so many decades. I think it's been a bit of a yo-yo time, right? The pandemic did really disrupt, and many companies, many startups, many investors, and even large companies were sort of struggling, right? With social distancing, logistic issues, customers not, sometimes customers just vanishing. All of those issues happened. But I think what has happened is if you look at it from far, and this is a little bit of hindsight, 3 years hence, to be honest, when we were in the midst of it, we were all saying, please stay standing, nothing else, even if you don't grow. But I think it's really been a period of rethinking and restructuring in some ways, right? So if you look at the pandemic, sectors like healthcare suddenly emerged. They were top of the line. Going digital, and we had already started going digital in India with the UPI and all the initiatives that were already, the foundations of which were already there, and that really came to play and give us a lot of advantage here. It created new modes and new businesses that we saw, all online education, online healthcare. I still remember at IAN in our fund, on our advisory board, we have Dr. Devi Shetty, and he said one line which was, I can't forget that line, right? When the pandemic happened, he actually said that just rethink your investment strategy, because 80% of the hospital infrastructure will move to ICU. Okay? And what does that mean? That really means that the OPD moves out of the hospital. And that's what happened, right? How many of us knew about so many devices that we used during the pandemic, right? The oximeter. I had no clue there was something like that. Look at the pricing of those devices. Look at the functionality of those devices. I'm just giving a few examples. So I think the pandemic, to your point, is an opportunity which a lot of startups actually emerged. We have a company which was in clean tech, right? They were doing robotic waterless solar panel cleaners. And they were at their overall lifetime revenue was at 1 lakh, right? In March 20. And literally in 95 days, a ventilator was created, all done on Zoom calls, right? It's a case study now. There's a book written about it. And in 15 months, they've done more than 10 million of revenues. So I'm just saying that these what we think are negatives actually are huge positives and are huge opportunities which entrepreneurs pick up. That's one. The second piece which you talked about, I think you alluded to Silicon Valley Bank issue. I think honestly, Silicon Valley Bank is not an issue to my mind. I'll tell you why. Because what happened was not an issue of the business model of Silicon Valley Bank. The business model of Silicon Valley Bank was intact. It was a bank for startups. It remained a bank of startups, and it has today, even it's a bank for startups, right? The problem they had is that their treasury miscalculated, right? They had parked money in a higher cost investments, and those fell with the Fed change. But look at the way they work. Literally in 48 hours, over a weekend, they behaved like a startup and everybody was banking again. Initially for 250 and now they're back to normal. In fact, when I talk to a lot of startups, even Indian startups who are banking with Silicon Valley Bank, they're saying actually now it's the safest bank to bank with, right? So I think there's a huge learning there, that how they could tweak their sense, literally pivot and make sure they're back on their feet within 48 hours. I mean, that's brilliant, to my mind at least. I think the third piece which you're referring to, and if there are any more points, you should let me know. But I think the third piece you're talking about is a lot of the governance issues that we are seeing in large companies, larger startups, growth startups. I think that is an issue, to be honest, because these are companies which are and remain to be innovative. I think Sagar in one of the earlier sessions sort of did mention that these, even Byju's, for example, I mean, hats off to what the guy created, took the risk and built what he built. But I think there is this whole piece that is something we all, whether we are investors, whether we are employees, or whether we are founders, I'm bringing all three, that governance is something we cannot take shortcuts on. whether it's diligence, and I think that sits with the investors. You have to go deep into diligence. You can't get into a FOMO situation ki wo kar raha hai to main bhi karunga. You have to do your own diligence, and if you don't, then the only person you blame is yourself. I think making sure all compliances, MISs, focus on cash flows, ensuring board meetings are done well and transparently. I think that has to be, it's if you look at a lot of our traditional companies, and when I mean traditional non-startups or non-VC funded or people who built it on their own, those compliances are there, right? So there is no reason to take those shortcuts. And the third, I think, if you look at 2021, it's a bluebird year, just as 2020 was a kind of a break year. 2021, world over, there was so much money going into startups. It's incredible, right? So that year is not coming back in the near future. So with so much money there, that kind of FOMO happened, that kind of issues happened, and we are all facing it, either directly or indirectly. I mean, I'm raising a fund, I'm facing it all the time. These are questions we are facing. So to my mind, yes, there are issues. Some have changed into opportunities. Some have changed into things that we need to think about, and as an ecosystem or as people part of this, we have to take corrective action and make sure we don't fall into that. I mean, at IE, we have 220 companies. We haven't had a governance issue. Touch wood, touch my head, whatever you want me to touch. But I think those are things which are being re-emphasized.
Right. Coming back to Anil, if you can throw some light on, in terms of, in the last 3 years, on the same parameters, if you can throw your insight in terms of what has changed and the trends for Indian startup ecosystem.
I don't know if I have much to add after Padmaja has covered everything, but I think last 3 years, from investor perspective, I think we saw 3 different cycles. 2020, I think at least 7-8 months went by only figuring out what to do and not to do. Everything was standstill. In fact, we were raising our second fund that time, and I was figuring out whether, it was the right thing to continue or we should stop. But incidentally, things picked up. I think we all came to terms and started leaving it. So that was a time when many startups actually got, further innovated, right? Especially, businesses which were dependent heavy on touch points moved to digital. And that opened up, new avenues for most of the businesses. Today, if you look at, almost every single business is online, be it traditional or non-traditional. The rule of the game was that if you need to be in business, be better digital. So I think that way it has helped the country a lot. I think India have advanced 5 years in terms of digitization. That's the official report. Today, the stage where we are actually should have been in 2028. So a very positive development, though world was struggling, but India benefited a lot 2020. 2021 was a madras because I think many people made a lot of money in secondary market, where sitting on ample of capital, and that actually led into different kind of growth. Many company benefited and raised the money, so that was a different cycle, right? So one, we were at standstill, businesses, learned the way of doing business while they were at home. And 2021 was madras, so everyone were, flooded with money, whether they needed or not, but everyone was flooded with money. I still remember one of our portfolio company had just closed a round, and within 2 months, they got another $50 million, right? So that was 2021, and 2022, we all know, when Euphoria died, I think everything came to standstill, right? Now people are not willing to write check because the numbers are not justifiable. Most of the businesses are in negative, and hence they are not able to command premium. And that's the reason we are hearing, like almost every week I'm giving views to some publication about drop in valuation. So the point is that it's not India. I think world over that's a problem. And it's not just India centric, but look at US, look at Europe, or even Southeast Asia. I think more or less, numbers have come down everywhere. Now it's a time to reset the button. The people who are able to do it, in my view, what farm is doing is right thing. Rather than dying, it's better to rebuild from scratch. So we are going through a different phase. Like Padmaja, I am also raising money for my new fund, and I have a different challenge. Like this is the third cycle. I'm sure even Padmaja would have seen similar number of cycles as far as business is concerned. This is the best time to invest because most of the innovative things happen when things are not good. I've seen many innovative stuff happening. So from that perspective, I think we are coming across many good opportunities. Secondly, numbers are really reasonable now. So these are the things I am witnessing as far as startup world is concerned. So 3 different cycles have happened in quick succession in 3 year back to back. So let's see what's stored in 2024, but up to now, that's what it is.
Thanks, Anil and Padmaja. So, Neeraj, you can throw some light on this, but they have covered most of the thing. I think largely there is one interesting change which is happening, and to my mind, जब घर का पैसा यहीं लगता है तभी growth होता है, right? And I was in a webinar where we were talking about impact of domestic LPs when they start putting in funds and they start investing into startups. So, do you really need fund up to Series A if the Indian money can start getting invested into Indian ecosystem? That is what happening in the public market now, and because of that is the reason that the public market is at all-time high. So, what, to your mind, what is the impact going forward would be of domestic money, domestic LPs, investing into local AIFs or directly investing into startups? And I'm asking you this because you have just incorporated and created your own fund. By the way, congrats on that. So, what's your take on that?
So I think, see, rightly pointed, and this is something that both Padmaja and Anil sir has already mentioned, that for the first time, all these adversities of 2020, the pandemic, okay, and after that, there was a lot of excitement. Both these situations, which was a contrast in nature, actually has given a lot of food for thought, first time to the wealth industry, okay. Both the traditional, which is like stock market, and unlisted entities like startups. For the first time, investors were ready to disrupt their own business models. And the only way you can do is by increasing the number of participants in this. So you have to bring in more people into the ecosystem, okay, with fresh ideas, fresh money. And I think that's the only way to survive. You cannot just survive with foreign funds, HNIs. You need to be more inclusive. I think with that mindset, I think what Padmaja was saying, that the kind of vibrancy that you see in this arena, and this itself is a validation of that fact, that now the ecosystem is not only in metro cities, it has gone very deep, and I think that's the right thing that has happened. And this is giving a lot of new ideas to the industry also, and to outsiders. Like for example, we started our company, we found a circle during the pandemic. So, and the whole thing started with a LinkedIn post. So we invited people to come and join our vision, and that's how basically we started. Today we are 10,000 investors, 52 countries representation, 560 cities footprint. Now all these people, almost 90% of them have joined us during that wave of excitement, and when everything opened up and for the first time people were accepting the fact that yes, on online call, I can come and listen to a founder's pitch, I can have my question answers, and I can commit money. Now this is a very, very contrastingly different, I think one thing which stands out of all the changes, for the first time, I think the trust can be created through the online communication also. I think founders are raised so much of money, and I think with that, now the industry has a tool to make the whole thing scalable, to bring even those local LPs into the ecosystem. And these LPs are coming and taking bets even in the fund level. They're not only like want to stop at the deal basis investing. So they are very actively investing in startups. they very actively now want to move forward and want to set up their own family offices. They want to set up their own syndication, angel networks. So I think this is happening for the good of the industry is what I feel. And that is the reason why we have started this platform called Invest. The idea is to give a tools, technology tools to set up your angel networks, to set up your friends and family groups, and then enable them with the rest of the things, which is like in terms of like bringing good deals on the platform or co-investment with them, or can we just set up a, say, small micro funds with them. I think these are new things which is happening, and I think this is how India is an ecosystem, and I think on a city level, regional ecosystem, we can be more dependent on our own means. Okay, so Calcutta can have their own way of building ventures within the money that you have in this circuit, and there is no dearth of money in Calcutta for that matter. And that is the story of every regional ecosystem is what I feel. We go to places like Erode and Salem and Rajkot and Chhattisgarh, and you name a city and we have gone there in last 1.5 years. Okay, once the things have started opening. And we see the similar kind of thing. So I see bringing local money, bringing the local community, business community into the ecosystem is the only way how we can make ourselves more sustainable.
Right, great. I will have a take from Anil and Padmaja also on this domestic LP in terms of what you think, and because you also have raising your next fund, what has been your experience on this? And then I will come to you.
I'm sure you'll not get time now. See, so it is a known fact that, the domestic money contribution is just 10% as far as investment in this space is concerned, right? So still 90% of money is coming from outside. We did our first fund, which was all raised from India, 100 crore. And, we didn't had much problem, but now thing is that the availability of domestic money, is improving, but still, I think it's far away from what it should be. I remember when, Flipkart exit happened, $16 billion, were exchanged for, share of Flipkart. Incidentally, not a single investor from India, right? Not a single. Whoever, in fact, we have few Indian names, but they are all based out of US, right? Not a single investor made money when $16 billion were, given in exchange of Flipkart shares. So unfortunate that wealth is there to be made, but thing is that it's a new asset class. So people are taking time to understand, and and I'm sure the thing will change. We would be happy to see that this 10% become at least 50%. However, for my new fund, I'm still raising more outside India because, the time spent on raising money outside is almost, 5 times lower than what time I have to spend here.
Right.
Right. So tough situation, but thing is that certain, actions have been taken which has actually helped, educating, people who matters. And now they have started. So I'm happy, glad to share that I hadn't met a gentleman who just reached out to me that I understand that you run a fund and I would like to invest in your fund. And within flat 3 days, I haven't even seen him. Neither we have met, and he landed up writing check in our fund. Right. So things are changing, but it's a slow lane.
Right.
Unfortunately.
Padmaja, in just 1 minute, if you can answer this. Sorry to say, but I have to come back to him.
So let me first apologize to Arjun. We're probably taking some of his time. But see, the question is twofold, right? This is a high-risk investment asset class, whether it's angel, whether it's fund, especially when you're investing in early-stage companies. So the point that becomes very important is not investing, but are you getting exits? Are you getting returns, right? And therefore, track records become very, very important. I mean, we've set up an angel group, we've got fund 1, we're doing our fund 2. Similarly, if you dig a little into Anil's track record, you'll see a similar track record, right, of angels and then doing things. So I think investing in this country is also aligned to what returns you get. Every investor, it's not only India-centric, around the world, the way they'll invest is when they think they will get returns, right? It's as simple as that. It's maths. Right. So we've started to give exits over the last 10 years, let's say, right? So that exits is now driving more money into this asset class. It started with tier 1 cities, and to Neeraj's points, that's sort of now going deeper. So it will open up. But if you look at the government part of it, it's opened up quite a bit, actually. You know, there are several pockets of money, whether it's central, whether it's state, whether it's entities like LIC, etc. There is money coming up. But I just want to leave a thought with you as you asked me this question, that if 90% of the money that is going in startups is from overseas, and it's been a recurring trend that we are seeing over decades, right, which Anil pointed out, the piece that I think we need to think is, why aren't domestic investors investing and taking the part of that returns? Why are they letting it all go out of the country? Because it seems we are doing the work, we are creating the value, and the returns are going outside of this country. Right? Simple Banyagiri, I'm trying to just say that. Right. So to my mind, I think it is time, and it is slowly opening up for domestic LPs, whether they are private, whether they are institutional, it doesn't matter, is that they start investing, start partaking in this asset class, start getting the returns, and they are now, it is now a position in the country, not only with IAN or with Anil or with any of us, that there are returns being come, and good returns. I mean, getting a 4x, 5x on a fund is not a mean thing.
Right, right. So coming back to Arjun, so you have exited in 2021, right? And that was a great exit in the middle of COVID. And then you created your own fund. So why your own fund, and why you have not started another startup? I mean, and what has been your experience? Because you're very young, you have created a fund, you are maybe one of the investors who are still very active on D2C, and you're helping them. So if you can get us through that journey and explain us in terms of your exit and the fund, that will be great.
Sure. So it's great to be back in Calcutta. Very few people know this, but I was here once a month for a very long time. My first and only investor in my company was RPSG Group, which is based here. So I used to come for a monthly board meeting, and we sold our company to a Calcutta-based investor. Look, I think Padmaja made a very important point, right? If I look at my family before the exit that we saw with Dr. Vaidya's, my grandfather, great-grandfather were doctors. They run an Ayurvedic clinic. The only investments were FDs and real estate. My dad runs a luxury jewelry business. And so gold and jewelry was an asset class added to that. And that was the entire family wealth held in these asset classes. My family put some money into my business when I started, and in 4.5 years, they made 35x on that investment. My dad tasted blood, right? Like, he saw what happened in 4.5 years and saw that no other asset class had returned him that. So other than me being a founder who has built and sold a business, investing my personal wealth, 70% of my salary that I make on a monthly basis back into the ecosystem, someone else around me who was a very, very traditional, fearful investor now has 2 of his own startup investments outside of the AIFs that he's invested, right? So I think what Padmaja said is important. We need to see those cycles of returns, if not for you, around you, right? So my dad may not have run a startup, but he's seen a startup exit and he believes in it, right? And so I think that has to be real. On why I'm running a fund, to be honest, I never thought I would be doing this. My process of exit was very, very fast. Between the time I got the offer to the time I sold the business, it was 5 months. So in April 21, I found myself being 29 years old and having nothing to do in life. And I had to figure out what was next in life for me. But I enjoyed spending time with founders, giving back to founders pro bono, helping D2C founders, teaching. Now I teach on the weekends India's largest cohort-based course on D2C. And we've educated, my wife and I, 900 founders through this program. And then we had some capital available, and so we started investing, and we enjoyed that, and then had the opportunity to set up my own fund with a large consumer-focused private equity fund. And I enjoy what I'm doing, but I will say that every founder doesn't. And so while I have taken this path of being an investor, and I feel that there is something that replaces the experience that all of them have, which I have in some sense of being a founder, although I have only 2 years of being an investor, so I don't have as much of a track record. But it's not for everyone. And so my wife, who built the business with me, is in the process of starting up again, right? And so I think we need more outcomes, more people who have seen outcomes to come back and put money into the ecosystem. I think the great part about the startup ecosystem today is that a lot of angel money that's coming into the ecosystem as well is from founders, from people who've seen the journey, from people who have been there for the journey. I think my biggest regret was I never had angels. I didn't have enough people that I could go to have a conversation with when I was going through those tough times. And so I think that's the beautiful part of the early stage investment pool now. And it's not only startup founders, it's all kind of founders, all kinds of businessmen who are giving this access. So I think it's a great time to be in this ecosystem. I will say that I have capital in my fund that's global in nature. And I think we have operations in the US and Europe as well. And I can say that seeing what's happening there, we are definitely in a special place in India where what's happening globally has not affected us as much. And if you go outside the top 5 cities, like I was in Surat a few weeks ago, you don't even see a lot of this global slowdown. So I think we're in an exciting place. I mean, there is some overhang and some sort of craziness that happened for 2 years, but I still think that I'm fundamentally bullish and still actively investing as I was in the period before.
Right. So I'm just coming to the last point now, and I will start with you now. In terms of next 5 years in India, India is the only country which is recession-proof as we speak. What are the trends? What are the sectors? What are the themes which will really work well? Don't say SaaS because SaaS is everywhere. But and I will start with you, and then I would need everyone's view on that.
Yeah, look, I think I've been a very patriotic person. I wear this band with the Indian flag on my hand. I've been wearing it for the last 13 years. So I'm fundamentally bullish and long on India. I think we have a special place to play in the next 5 or 10 years in the global ecosystem as well. And everyone will be looking at us. And so it's our responsibility to make things happen. I'm a consumer-focused investor. And so I think I'm looking for businesses which represent a larger TAM opportunity. So businesses that go outside the top 10 cities like my business did. Specifically, if you ask me in consumer, I'm looking at businesses that are outside the most competitive parts of our consumer ecosystem. So health, wellness, sports, nutrition, fitness, pet, home, kitchen. These are spaces where there haven't been enough brands created, and we will see many more brands created over the next 5 years.
Right. Coming to Neeraj bhai, what's your take on this?
See, I see any business model which is inclusive in nature will work in India, because there's a huge population which is outside the development in any sector. If you think, okay, the traditional sectors like healthcare, fintech, or education, or you talk about anything which is very completely on the other side, which is like disruptive technology advantage. So anything basically around this will really work. At the moment, if you ask us as an investor, we are heavily invested in EV as a sector, because we see that EV is one sector which will have a major adoption, both at B2B side of it, the business side of it, and the consumer side of it. We are very bullish on the agri side of it. We feel that agri sector in India has a capacity to give at least like 10 unicorns in next like 10 years, even more than that. And on our own side, like on fintech, personally, although we are ranked as one of the most active investors in the country, but we feel that industry itself, the investment industry itself is on disruption. So if you ask me as a startup founder, we treat ourselves founder also. So we are trying to disrupt the industry itself. How I can make this possible? 3 things we are trying to solve. One is ease of investing. Second is discovery of opportunity, and the third is liquidity. I feel liquidity in this startup ecosystem, the unlisted, itself is a huge opportunity. Right. And I think both at the policy level and as an industry level, if we some model can be brought into this, I think it's a huge business. Okay, right. And we are working on this. Right. Can we bring liquidity into the system? Can we make ease of investing? And can we create an ecosystem where if I meet somebody here outside in the corridor, a great company, can I make that company really connected to the global investors? So that inclusivity in my own way, in my own industry is what we are trying to do. And I think I see a lot of good founders who are bringing big such focus. Like HESA is one of the company that we have funded. The kind of rural impact they have on rural economy, supply chain is huge. Right. So is Zip Electric, which is actually through EVs is doing that. So is Blue Smart, again basically a EV company. So I'm saying anything to do with the Bharat inclusion, have more people into the ecosystem is what I feel as a business model we are bullish.
Anil bhai.
It says time's up. I believe time has just begun.
Do we have time for a couple of questions from the audience? Okay. Okay. Okay, fine. So I think with this we will end, and thanks everyone. Thanks Padmaja, Anil, Neeraj, Arjun. Thanks Tamika. Thanks.
Thank you. As we conclude this illuminating discussion on funding for growth, I invite Mr. Bimal Patwari, President TiE Kolkata, along with Mr. Arup Bonik, VP, Business Banking, East India, HSBC Bank Limited, to join us on stage, please.